All right. All right. Good morning, everybody. Happy hump day. Happy Wednesday. Give me just a moment. I'm going to get my goodies over here turned on real quick and make sure we're good to go. All right. We are. Make sure I got all my goodies set up where I want them over here. Let's get this over here. Actually, yeah. Yeah, I'll leave it over here, actually. Right there. I need my macro and my eco index. All right. Well, good morning, everybody. It is again Wednesday morning, 6:30 a.m. Central Standard Time. Still trying to get the sleep out of my voice and my eyeballs so we can take a fresh, clear look at what we got going on today. Just to say up front, I am still in my Aussie US dollar long position that I got in on Sunday evening. So just another average trade for me, guys. I'm usually in these things for anywhere from 1 day to 4 days, probably closer to 2 to 4 days, but just depends. Just depends on how the weeks work. Some days, if it's number one, if it's a losing trade I'm in, I'm usually only in that thing for a day, right? Whenever I have a small loss, it usually happens immediately, and that's a good thing. If I'm wrong, I want to know it right away. I don't want to know 3-4 days later. So if I'm in a trade this long, going on the third day, then that's a pretty decent sign. I mean, our ultimate goal in trading is to, when we get into a trade, make sure it goes and wins in our direction ASAP. The sooner the better. That way we can get on to the next trade. But sometimes they do, more often than not, I should say, they do take several, a few days, a handful of days. Market's got to have time to see the process through. Where is my light switch? I have a light switch. There it is. I just wanted to get my other light turned on. But yeah, if it's a good trade, 1 to 4 days. If it's an awesome trade, it usually happens within the same day, trading day. But quite often, more often than not, these trades do last me 2 to 4 days. So, yeah. And then the ultimate goal with this Aussie dollar long trade is just to let it do its thing. I can't rush it. It's at the mercy of the market at this point. I just have to trust that the strong Aussie dollar currency index score that it has will persevere. The dollar is, starting to strengthen a little bit on its own when it comes to the fundamentals. But obviously, the Australia rate statement released the other day was a good thing for the Aussie dollar. Of course, we had the 25 basis point increase, and that's a good thing for the currency. But yeah, it's just kind of maintaining, just kind of out there doing its thing. We do have kind of a partial government shutdown going on since the weekend here in the U.S. So, man, my hair is everywhere today. So it's going to definitely affect some of these releases that we have. Obviously, we're supposed to have the non-farm payroll coming up on Friday, but it is delayed. Let me get my window shared here for you. It is delayed, so about the best thing we have for the week is today's today's ADP number. ADP non-farm employment change release. Now it says it's going on still at 7:15 my time, which is here in about 40 minutes, 50 minutes, something like that. So we will see. By all accounts, by everything I've read and seen, I haven't seen that this is going to be delayed. So this isn't necessarily the end-all, be-all report for these, what I would say, well, they're all important. All red folder events are important. All high-impact events are important. But sometimes when you have things like the flash, like right up here for the euro, we had the flash CPI report. It's kind of a prequel, if you will, to the main report that usually comes out a handful of days later. So it's a prequel. The most important is the final, but this is a pretty good idea of what you're going to get when the final report does come out. I think it even might say it on here how many days in advance this thing is. Yeah, right here, guys. So there are two versions to this report, released about 2 weeks apart. Yeah, it says it right there, actually. Flash and final. The flash release, which is the flash release, is the earliest and thus tends to have the most impact. Okay, so that's what I meant when we're talking these flash reports. Anytime you see flash CPI or flash PPI or whatever, it's kind of a prequel. Well, it's kind of the same thing in a way with the ADP non-farm employment change report. The main one that we get on Friday is the super important one, but this is a nice kind of precursor, if you will. So that was the point of me seeing that. Let me just flip over here to this week and get rid of some of this other stuff. Yeah, see, they've even taken it off the list. The non-farm that we were supposed to have on Friday. So yeah, this is, assuming this still comes out, this will be about the best thing we get this week when it comes to those reports. Now, and I think that's the main one for the week. I don't know. We might still get the sentiment release, the University of Michigan consumer sentiment release on Friday, but I don't know. It's just all up in the air, guys. Anytime we have these government shutdowns, it's just like a gnat flying above your ear, or a mosquito. Okay, a room full of mosquitoes where they're just picking at you. It's just annoying, right? Super annoying. It's always annoying when we get government shutdowns, because what do we live on? What do I live on? What do a lot of my colleagues live on as far as trading? We live on that hard data. And if we're not getting the hard data, then we're kind of at the mercy of, we're just at the mercy of the markets. A little more vulnerable, I should say. I got to have my hard data. So, when that's the case, when we have partial government shutdowns or full government shutdowns, I may just not even pay attention to the US dollar during that time. Like when we had this big government shutdown, and good morning, by the way, Marvin. Good morning to you from Philippines. I used to work with a lady here in Kansas from the Philippines. Actually, probably 2 or 3. I don't know. Let's see. We had a small group of them that I worked with at a warehouse when I was a kid, when I was first cutting my teeth as an adult, a young adult, finding my first job. But we had a handful of Filipinos that worked with us, and I got invited to their house one day for a party, and they made some food that was just out of this world, Marvin. It was incredible. It was delicious. It was wow. So they became really good friends. We were all a close-knit group of individuals that worked at this particular warehouse, and they were some of the most awesome people that I ever worked with. Just absolutely really cool people. In fact, just a side story, one of the Filipino women that worked there actually hooked me up, got me set up with my wife at the time. Hooked us up, kind of a blind date, if you will. That was a Filipino woman that hooked us up, that played matchmaker, which went on to be my wife there at one point. So great people. Can you share with us the Edge Finder top setups? Yes, sir. I don't leave home without it, my guy. We could definitely take a look at that. Yeah, but yeah, just to finish off on the Echo calendar. Okay. So yeah, non-farm employment change. Now this is specific to ADP, guys. ADP is the largest employment software company for the states. I don't know if it is like that, across the world, but I know particular here in the US, the United States, ADP is the main one. So it obviously, human resources departments utilize that. Again, it's the biggest one here in the States. So this is always a big number, at least specifically to us here in the States, right? So this will be good. This is as good as it's going to get, since we're not getting the Friday regular non-farm employment change. So they are expecting 5,000 increase on the jobs, the additional jobs added. Okay. additional employees hired. And then at the same, well, actually, an hour 45 minutes after that, that's when we have the services sector of the purchasing managers index that's coming out. Now, this is a beautiful number. It's at 54.4, nice expansionary number. But if these numbers ring true, then that'll be a little bit of a negative to the US dollar, which kind of selfishly I'd be okay with because it would inevitably help my Aussie dollar position that I'm in over here. So, it's kind of it's kind of a weird thing whenever you're wanting a trade to work out in your favor, especially a currency trade, a currency pairing, you have to wish for bad news for one currency, right? That's just kind of the way it is. Good news for one currency, bad news for the other currencies. So, I live here in the States. I love my country. We're a little hard-headed and crazy at times, but for me, I want to see a bearish US report come out for the services sector. I really do. Now, not in the grand scheme of the country itself, but it's a shark infested waters that we do, guys, that we trade in. Okay. It's a cutthroat world. That's just the way it is, right? This is what we all signed up for. So I'm definitely going to be paying attention to that report to see what happens with my Aussie dollar trade over here. But yeah, currently right now, still sitting about $1,100 up. It is unrealized, guys. As always, it's not your money until you close the trade out. Common sense, but a lot of people like to pretend that that's theirs when it's not really theirs yet. But the good thing with my trade on Aussie dollar is I started with my stop loss down here, guys. And whenever we started breaking some structures here on this candle, okay, that's when I moved my stop loss to just above break even, just like that. Take the risk off the table as soon as possible. That's always my goal. Now, I don't want to take it off the table too quick because I need to give my trade room to breathe, right? Like it did here. Okay, we made this double top right here and start coming down here. I don't want to be putting my stop loss up here just yet because this thing could just continue to roll on over potentially and then, go in my favor. So I need to give us some breathing room. But once we did break this series of this double top right here, okay, once we broke this double top on that candle right there, that's where I moved my stop loss up. Now I moved it up here, but then so this is a little bit about the trajectory of this trade, and then we'll get to the top setups here in just a second. Okay, so this candle close is where I take the risk off the table. I go from here to here. Okay, free trade, no matter what happens. I cannot lose money on this trade. Oh, gosh, dang it. 1 second. 1 second, ladies and gents. God dang it. I have a space heater. And sometimes it'll flip my dang breaker. And it did that yet again. So let me see. Is everything still good? Just want to make sure you guys can still see my screen. Okay, looks good. Awesome. But anyway, Bitcoin. Yeah, let's get on Bitcoin as well for you. But yeah, just to finish this trade idea up, guys. When we closed on this candle right here, that's where I moved my stop loss from here to break even. Take the risk off the table. And then when the Australia rate statement came out 2 nights ago for me here in the States, we got this big expanded range candle right here because it's positive for the Aussie dollar. That's that 1 hour candle that formed. Now, the bulk of that movement formed ASAP, like pretty quick. But that's just your whole 1 hour candle when that came out. So when that happened and we closed up here, well, that's when I moved my stop loss just a little bit higher. I moved it under this actual swing low. And then what happened again? So on the retracement from that, we pushed back up and broke the high yet again, broke this high. When we did that, that's when I went ahead and put my stop loss under this swing low here, which is basically that newly formed demand zone. And that's where it's been ever since. Okay, I'm just going to leave it there. I probably normally would not have put this stop loss up a little bit higher under the, skipping this swing low. But the reason I did that is because that Australia release actually created a pretty nice demand zone in its wake. the candle right before this red candle, that's what I see. That's what I look at as kind of a temporary basing action before this strong push away. This strong push away is proof that demand heavily exceeded supply. Remember, trading is all trading is a relationship between supply and demand. So when Australia released that they increased their rates by 25 basis points, the demand heavily exceeded supply and closed way up here. On the pullback, it was still showing that it was strong because it didn't pull back to where it started. So it basically left this gap right here. Okay, there's your strength. There's your fair value gap. Now the gap itself is not the strength. The strength is the basing action. The leaving of the basing action. That's where your strength is, because that's where the big banks initiated the strong selling, the strong buying rather. Sorry. So I felt pretty safe about moving my stop loss below that demand zone, below that consolidation point, because worst case scenario, if price comes back to this demand zone, which is basically protecting my stop loss at this point, then I would be expecting that we would bounce in and bounce back upwards, because there was a nice grouping of unfilled orders here. Remember, banks don't have enough time when you only have a small consolidation like this. They do not have enough time necessarily to put in their full order. So they put in a partial order. Price runs away like it did when the Aussie release came out, but they didn't fill their full order. So if they get a retracement, which of course they can manipulate down to it, then down here they could put in the rest of their orders. So for me personally, like I said, I normally would have left my stop loss here, but because we had that strong push away from the release and we got a newly formed demand zone, I went ahead and put my stop loss there, just to kind of lock in a little bit extra gains. So that's kind of the anatomy of that trade right there. But yeah, let's look at top setups so we can look at Bitcoin for you and what other goodies we got. So just in looking at the top setups, okay, if any of you guys have Edge Finder, or if any of you have been paying attention to my videos, Trader Nick's videos over on A1 Trading, or any of the other guys, okay, Alan, Marco, all the rest of them. If you remember, as recently as a week and a half ago, we had a hell of a lot more assets on this top setups list, and we had some much higher scores. Talking about very bullish, right? We had some scores up in the 14s, the 15s, the 13s. But now we've basically taken off quite a few scores back down to the neutral territory. And now we're left with a much smaller list than the list we had a week ago, or even earlier this week. And the thinking there is, and I think Nick even alluded to this, everybody was kind of preparing for the for the non-farm payroll report that we're going to get on Friday, but now we're not getting it. And it just so happens that the dollar has strengthened a little bit. Obviously, the Australia dollar has strengthened a little bit. I think the weakest currency, the Swiss franc, actually increased a little bit. So it's not in the cellar anymore. It's not at 0%. It's at, I think, what was that, 30? Oh my gosh, where are we at here? Trying to find my goodies. Sorry, guys. Give me 1 second. Macro scanners, Tiger. Yeah, just going back over here to our index. Yeah, Swiss franc. So Swiss franc was at 0%, but it's actually gained a little bit of strength, a tiny bit of strength, but it's still the worst performing currency. So a lot of these currencies are basically reverting to the mean, reverting to the middle, reverting closer to that straight up 50% from where they were. Because like I said, pound was up in the 80s. Canada was higher than it was. New Zealand is still up there. And the euro actually has gained some strength. But when it comes to like the Aussie dollar, okay, this was in the 80s. This was exceeding expectations on 80%, but it's had recently a bearish report. So in other words, they're coming to the middle. When these currencies kind of revert to the middle like this, well, There go a lot of your scores. They go back down. And I was actually looking at the top setups history on a lot of these. Aussie Swiss, this is one that was way up there at 15 the other day. As you can see, the scoring has been going down closer to the middle. Aussie New Zealand. Okay, this one's well, not this one because it was already medium. What else is on our top setups? CAD Swiss is on there. You can see it's been going down from bullish back to neutral. CAD Yen is on the list. I think this is one that actually increased. Yeah. So this is one that has actually kind of went upwards towards the bullish a little better. CAD Yen. So this is kind of an outlier. Let's see here. Euro pound is on our list, but this one actually, yeah, right at 5. Euro New Zealand got a little bit weaker from 6 to 5. But basically, depending on which of these currencies you look at, yeah, let's look at some of these Kiwi pairs. New Zealand Swiss, okay, it was a very bullish score. It's now down to a 10. We just saw a 9 or 10. So as strong as some of these currency pairings were, they're just reverting to the median. That's basically what I was, trying to get at. Again, CAD Yen is kind of an outlier. So probably in anticipation of the release that we're not getting now because of the partial shutdown. So yeah, just going to be a little bit more picky. I've been chasing a couple of these Aussie pairs around, Aussie Swiss, Aussie New Zealand, but I just didn't. I missed 2 trades yesterday. Let's go look at Bitcoin. I missed 2 trades yesterday, guys, by like 2 pips. 2 pips. And I didn't break my rules. I obeyed my rules and did not front run these trades. And we'll get into those in a minute. But yeah, kind of funny, kind of funny. I mean, I'm in the Aussie long, so I wouldn't have got in one of these Aussie pairs, Aussie Swiss. I wouldn't have got into it to begin with on my 2 main accounts, but I do have a brand new 100K funded account. It's an instant funded account through a new company I'm working with out of London, actually. And I'm trying to get my first trade pushed off. And it's just funny because the 2 pairs I've been watching just barely missed my entry, but that's okay. I didn't break my rules, so I'm happy. Bitcoin, it's a neutral item, but let's just go look at it from a technical aspect for you. Yeah, I mean, if we're talking top setups, it's going to be into the neutrals. Okay, Bitcoin, it's been a while since it's even been on the list. Let's go look at it. This is our top setups history. So you can see Bitcoin is about as neutral as it gets. This is the last X amount of days. The last time Bitcoin was giving us a bullish signal was back on January 18th. So it's been a little while. And then at that, it was only in bullish territory for 1 day. So Bitcoin, there's not really a great reason to be trading this thing right now, I don't think, from a fundamental and sentiment point of view. If we go look at today's score on this thing from an analysis point of view, I do believe it's straight up neutral. Yeah, neutral -1. So think about this. Technically, it's straight up 0. You're not getting a very strong series of higher highs or higher lows on this thing. You are getting some lows, but we'll take a look at the chart here in a second. As far as sentiment analysis goes, it's actually given a pretty decent score, decently positive score when we're talking about a combination of the relationship of smart money versus dumb money, right? Smart money being the banks and the institutions, dumb money being the average trader at home on their computer. Now, remember, I don't create this terminology. This isn't coming from me, but that's just widely known terminology used by everybody, the talking heads of trading. But it's jiving well for the time being, meaning the banks slightly are kind of increased on their long positions of late. And well, I don't know. Let's actually go take a look at that. Let's take a look at the retail sentiment, guys. Let's take a look at that because I'm kind of interested to see a couple things over here. Retail sentiment. I want to look at Bitcoin. Where are you at? Bitcoin. Oh, I think I have to turn it on. Oh, come on. Crypto. Bitcoin. Where are you at? Okay, so Bitcoin is net long. Okay. The average retail trader is net long in this trade 4 to 5. 4 to 5. So this is part of the reason we're getting a +3 score on the sentiment analysis section of that, where I showed you it was saying neutral. So, and then if I look at so retail is long. Remember, if they're long, we don't want to observe the masses and do the same. We want to observe the masses typically and do the opposite. So that's a bearish signal, okay, because they are long. Again, 80% of retail traders are long, net long. That's the positioning. So, now if I go look at the COT data, so see what the big banks are doing for Bitcoin, we can see here that they had just a very tiny increase in their net longs overall last week. So that's a little bit of a bullish number as well. So if you're just straight up a sentiment analysis trader, good reason to buy Bitcoin. But I like to see the analysis in the trifecta, guys. Trader Nick too. A combination of the sentiment analysis, fundamental, and technicals. And then if we go look again at the top setups and just kind of isolate. Let's do this. Only this. And just take a look at Bitcoin just for a second on here. Okay, Bitcoin -1. So trend is given a bearish trend. Seasonality. So for the month of February, Bitcoin over the last 10 years on average typically is gets a bullish reaction. Hello, Mr. Peeps. How old are you, sir, and how long you're in trading? How old do I look? This is my 12th year in trading. I took classes with Online Trading Academy, if anybody's ever heard of them, back in 2014, January of 2014. I took a stocks class, and with that organization, when you purchase into the program to actually get the education, they actually give you free lifetime retakes. So I took the class, and they used stocks as the asset to teach us. So I took that in January, and then in July, so 6 months later, I retook it so that I could just, further it. It's just like anything else in life, or think about when you're in school. And quite often it takes multiple times to read something or see something before it actually sticks. So that second time I took it, the retake was awesome because stuff started to make a little more sense rather than drinking from a fire hose. Okay, that's the way it is when you go through a curriculum like that. So anyway, took that, retook it, and then the following January 2015, that's when I took the the Forex course. I took Forex because you could get into Forex cheaper at the time as far as getting a funded account. So I took that, and then I retook Forex 6 months later. So basically 2014, 2015 is when I got my lessons. But the core strategy, the most important part of supply and demand, risk management, that was on day one in 2014. So anyway, just going back to Bitcoin real quick over here. Okay, so there's your technical readings. Again, it's bearish for the trend, but it's bullish for seasonality. So again, those kind of cancel each other out within the technical field. Neutral. Okay. Then we flip over here to the sentiment analysis. We go down here and we see the COT report. The big banks did increase their long percentage last week. So that's a bullish sign. And then the crowd sentiment as well. And that's also a combination of some other things like the put to call ratio. Speaking of the crowd sentiment, the retail sentiment, put to call ratio, AAII investors survey, and the retail sentiment readings themselves. So that's kind of where this data is being pulled from. But yeah, bullish sentiment score. But then we flip over here to the fundamentals, and you see a bunch of red on here. Okay, all the jobs data that was kind of bearish for the U.S. dollar. Some of these inflation readings, pretty decent on some of these growth numbers. But within fundamental analysis, we don't only look at the growth numbers. We don't only look at the inflation numbers. We don't only look at the employment numbers. You have to look at these three subcategories combined. Okay. And that's why we're getting a bearish reading, because yeah, even though we had some pretty generally good stuff in the growth category, the growth, the growth sector, the inflation and jobs numbers are kind of dampening the spirits for specifically for the Bitcoin. So that's why we're getting a minus score. So remember, technical 0, sentiment +3, fundamental analysis -4. So that's just too mixed of a signal if we're looking at the reason to get into the trade. That's the important thing. The fundamentals and the sentiment are the reason or the excuse to get into a trade. The chart just tells us when to time it. So if you're just explicitly a technical trader, or this is how, whatever the case is, this is still a good thing to do. Look up the analysis so that if and when the fundamental and sentiment analysis flips to a bullish reading, then we've at least got it plotted and mapped on the chart. So currently, looking at Bitcoin, we've actually dropped into a 4-hour demand zone. This is this green bar over here. Now, not a strong reason for me to buy this because I didn't really get a higher time frame confluence. But if we're just looking at this specific point in time over here, okay, we did have a nice bullish response from this basing action, because if this is our consolidation candle, we flip over to the leg out candle where demand heavily exceeded supply. Look at the volume underneath. That's a big spike, big candle. That's a big expanded range red candle. What's called a ultra high volume candle. Broke structure here. Okay, that candle, technically on its own, this was a very nice looking spot to potentially buy into this position on a retracement to this demand zone. But as you see, we just missed it. Okay, price just missed bouncing into the demand zone. But at the time, if I had a bullish reading on my fundamental and sentiment readings, this would have been a dang good place to buy this trade. But now we have to, and this was obviously back in April of last year. This is the liberation week. But now you guys, we got to fast forward and understand that at this point, we had a big, strong push away, but now we've got a big drop, big, ugly drop, a big, ugly sell-off in a lot of these cryptos. And it's coming in way too hot and heavy in this impulse leg down. So it's not a good idea, I don't think, to be buying. And not only that, we didn't even have a daily demand zone. We didn't have any candles that that left us a gap, a fair value gap. Okay. All these candles, if you can look at, let's think about this for a second, guys, and let me get rid of my moving average. If you're trying to buy in this area right here, just looking at the daily time frame, if we're trying to find a demand zone, there's no gaps. So when there's no gaps, no fair value gaps in this immediate area, now there are up here, but we're talking about down here where price is at. If there's no gaps, that means that's an efficient market. Efficient. Banks don't like efficient markets. They like to look for inefficient markets. How do we have an inefficient market? By looking for that acceleration gap, by looking for that runaway gap, that fair value gap, and then isolating the unfilled orders just beyond it. So daily time frame, we don't have that. All these candles, all these wicks, if we look at every second candle to the right, they overlap candles and wicks. Okay, this right here was pretty close, but it looks like this one did get it right here. Okay. Yes, we have a gap up here, but we're not worried about that because price is down in this area, right? So looking at a daily time frame, there is no gap. And when I'm looking to get into a supply or a demand zone from a higher time frame, I like to see at least a daily 4-hour confluence. And right now I'm not getting my daily. So it's not a trade for me to be trying to buy this market, let alone the fact that it's coming in super hot right now. Okay, it's screaming downwards. Look at this. It's an impulse. That's a nice parabolic move down. So do you want to try catching a falling knife? I don't. Right? I don't. Even if we get a bounce, I mean, it could probably very well just turn around and go back down and just continue that downwards move. So I don't want to be the one to step in front of it, step in front of a moving freight train. That's just not something I'm signing up for, especially when I'm not even getting a fundamental or a sentiment reading, bullish reading. So that's Ye Bitcoin. Great question on that, though. Top setups. Let's get back over here for a second and just get rid of the neutrals. So yeah, I haven't really got outside of the trade I got into Sunday evening for me here in the States, because that's when the market opens. I haven't had anything the last couple of days. I've had 2 trades that I wanted to get into, but again, I just missed my mark. So let's go look at Aussie Swiss and New Zealand dollar. So Aussie Swiss, as you see, is given a nice bullish 8 score. I'm thinking there is another one, but I can't remember off the top of my head. Aussie Swiss. Where you at? Where are you at? Oh gosh, there you are. Okay, this is a trade that I was looking to try to get into yesterday, but it just missed a mark. Just missed my entry, guys. A little bit annoying, but such is life. So let's go down to a right here. Okay, look at this. See this demand zone up here? See how strong this thing looked? So what I like, reasons I like this demand zone and reasons I wanted to buy right here, but I didn't, okay? When this price formed, it formed right at a former resistance. That's that blue dashed line that's just beautifully just getting respected. Okay. So what happens to resistance? Resistance often, not always, but often becomes support. So it just so happened that really strong demand zone, which of course was the result of the Australia rate statement release here in the States in the evening. Well, not here in the States, but in Australia, during my evening, it just so happens that demand zone, okay, that consolidation before the push away, before the release, was at that exact same spot. Okay. And then what happened? The release comes out. The buyers step in, demand heavily exceeded supply, price pushed up, gapped up. So it left us our gap. Remember, the gap is not a place to buy or sell. I know a lot of people do it, but it's just not consistent, I don't think. Right? I don't know. That's just my take on it. Maybe it's a hot take, but the fundamentals of that trade just don't make sense to me. They don't. I'm not saying I'm the end all be all, but I can't put my head around buying gaps, buying the gaps themselves, because the gap itself is not the strength. The strength of that strong move, that the gap that was left in its wake, the strength of it is derived from the consolidation, where traders temporarily agreed on price, fair value. That's your fair value. That's your fair market value, is the consolidation. Okay. That's where the unfilled orders are. That's where traders want to jump back into this trade potentially a second time. Or if they missed out completely, then that's where they want to get in for a second time so that they don't miss this move again in their heads. So anyway, what happened? And then there's some other odds enhancers, but yeah, Aussie Swiss obviously giving a bullish signal. So I was looking at this trade and I was kind of filtering it through some moving averages. Let's see here. Yeah, I was basically looking at a 50 moving average, exponential moving average, which is this light blue line or teal line, if you will, because it was going through my demand zone at the exact same time. But what happened? Well, first of all, I want to go down a time frame because that's 1 hour. Excuse me. 1 hour. Let's see here. Okay. So just kind of drilling down deeper into this demand zone. 30 minutes. was the first demand zone I was looking at. So I got a 30-minute candle. Let me get rid of the drawings for just a second. This 30-minute candle right here, that was kind of my first spot that I thought to myself, I'll potentially get in, because that's a very strong. You want to talk about fair value gap, guys. You want to talk about a sign of strength. This right here is a sign of strength, because there's your 30-minute demand zone candle. And I incorporated the candle to the left as well, because the wick goes down a little deeper. So as you can see, I've actually got my stop loss below that. Now, I started from a 4-hour time frame. Okay, that's why the box is going higher. But I very easily could just move this down to here like this, and that would be my 30-minute demand zone. But I decided to get just a little bit more careful, a little bit too careful, and I actually dropped down to the 15-minute demand zone, or 15-minute time frame. And if I look at that same spot, guys, you can see that the 15-minute candle before the strong move up, the top of the wick was just a little bit lower than the 30-minute candle, okay? Now, how do I know ultimately which time frame to stop at and use? Well, number one, I have a basic rule. Especially on some of these slower moving currency pairs like Aussie Swiss, my personal rule is I prefer to see the range of this zone. So in other words, the height of it from top to bottom, I've got to see it at least 5 pips tall. So that's right about 5 pips, basically the top of the green candle. Okay. Or the top of this candle here. Up here is a little higher, 7 pips, 8 pips, no big deal. But I just tried to get a little bit too cute on this. I tried to get a little too exact when I should have just used the 30-minute candle. But see, if I look at my volume spread analysis candle down here at what would have started as the 30-minute candle, you can see, okay, that's the same volume as these other candles just before it. But the 15-minute candle, that was the same as well. So in other words, the 15-minute candle was not showing that much strength. So if it's not showing that much strength on a 15-minute time frame, then I should just stick with it rather than the 30, because the 30 candle started way over here. And the candle after, and this is getting a little more advanced, guys, so I don't expect you to worry too much about this, but this is just how my head was working. My head was saying, well, if the 30-minute candle includes another 15-minute candle before the strong move, then I'm just going to stick with the 15-minute candle. I don't want to go any smaller of a time frame, because my zone is probably going to decrease in height. I have to give it's got to have some type of balls on it. You know what I mean? So that's why I ended up not buying where we're at. I was looking at it from the 15-minute time frame. And look what happened, ladies and gents. Look at this. Look at this. Okay, we wicked in beautifully to the 30-minute candle, which is the initial one I picked out. Okay, the 30-minute candle right there. We wicked in beautifully, and then that's the one that caught the bid and ran away. I just so happened to be waiting on this white line. So price hit the top line, but it missed the white line by a pip. It was only 1 pip. Is that 1 pip? Let me go measure that. I got to know. 1.4 pips, guys. That's a pip and a half. Missed my entry by a pip and a half on this thing. I should be in this trade right here, but I got too exact. So that's just a good example of sometimes you can go through paralysis analysis. A lot of people don't put filters on, period, but it's not a good thing. You got to put filters and odds enhancers into your trades, no matter what kind of a system you use, okay? Whether that's a whatever, moving average crossover, RSI divergence, volume spikes, Bollinger Band bounce, right? I mean, whatever it is, or obviously, things like fibs and VWAP. There's all kinds of ways we can look or use odds enhancers to filter out trades. But sometimes, in this case, you can over filter and then you're left without a trade, right? So that's kind of the balance I needed to strike a little bit better on this. So again, I didn't lose any money because I didn't get into the trade. I just missed out on this gain. Aussie Swiss is one of the slower moving currency pairs. So, that doesn't look like much of a move. What is that? 424. So that's about 25 pips up from where I should have entered. That doesn't sound like a lot, but Aussie Swiss, its average true range is actually, on the smaller side. It's just a slower moving currency. I would say this is a beginner type currency pair, guys, because again, it's not like the dollar yen or pound yen, the yen pairs that move a lot. This is one of the slower moving. This is like when we first got our first driver's license and we started driving for the first time. Okay. I know, especially for me, Daddy didn't want me driving some super nice car, like a Lamborghini or a Porsche or anything like that. He gave me an old beat up 1969 Ford Fairlane. Slower car. In other words, kept me away from the fast cars. Okay. It's just better to cut your teeth driving a car on something that's slower and that's not flashy, and that if you happen to scratch it up or wreck it, it's not going to cost you an arm and a leg, right? So they start us off with a slower car, Ford Pinto, Ford Escape, whatever the case is. They're not trying to put us up in a BMW. Okay. So that's kind of the way currency pairs work. Do you really want to be jumping into a currency pair necessarily that moves 120 pips a day or 150 pips a day? Or do you want to drive something a little slower to be able to get used to it? I actually have, just so you guys know, if you ever want to see how fast a currency moves on average, this is a great website, offbeatforex.com, which I'm not affiliated with at all, just so you know. But if you scroll down, take a look at this. This actually shows you the average daily range, the average true range of all these currency pairs from highest to lowest. This is a cool site, guys. Now, 2025, I just have to go down here and scroll over, and you can kind of see. The problem is when I scroll it over to see 2025, it kind of moves the currency itself around. So it's kind of a pain in the ass I don't know why the hell they designed it like this, but let me just try to strike a happy balance there. Okay, we could probably see it all like that. So 2025, and this thing's only out the year prior, guys. All we really care about is what was the entirety of the previous year. What was the average true range? How fast do these currencies move on average per day? That's what this is telling us. So again, I know it's kind of cut some of the letters off, but at the very top is gold. 530, because there is supposed to be a zero there. 530 points, 530 pips, okay, XAU USD, is how fast gold moved in 2025. Far and away the strongest of the assets that we like to trade, 530. Pound yen was the number 2 spot. It is actually, again, there's a digit cut off over here, but it's 160 pips. So pound yen is your Lamborghini. Well, I take that back. Let's put it this way. Pound yen is your BMW. Pound yen is your Audi. Okay. Some of those nice cars, but not as nice as a Lamborghini, which is gold. Gold moves over 3 times faster on average per day than pound yen, than euro yen. But pound yen and euro yen themselves are far and above, way better than old Pinto, an old Ford Fairlane car. Your starter cars, and in fact, I need to, your starting. Hold on a second. Let me go do something real quick, guys. Okay, so let's just get an idea. So anything that you have, basically, that's over 100 pips, like from here up, that's going to be some of your cars that are kind of fast. Any of the cars that are under 100, more specifically under 80 pips a day, this is going to be some more beginner friendly currency pairs. So let's just look from here over. Okay, if you're a beginning trader, a newer trader, and you're asking, because we get asked all the time, I get asked all the time as a coach, hey, Tiger, what's the best currency pair to trade? And I usually say, just go look at your ATR and go for something that's under 80 pips. Well, here you go. That basically gives you dollar Swiss. It basically gives you dollar CAD, Aussie dollar, Aussie CAD. Okay. The slowest moving currency is the euro pound. Now, remember, this is data compiled from 2025, where it only moves 40 pips a day. So anything that's between the 40 and 80 range, that's real. These are really good beginner currencies because they don't move too fast. Remember, you're a brand new kid. You just got your driver's license and you're trying to drive and learn driving. You don't want to be driving a Lamborghini. You don't want to be driving a Porsche. You want to be driving the butt ugliest car on the road so that if and when you bounce into something, you don't have a $10,000 bill at the shop. Get you a part, replace it, rub some elbow grease. If you bounce into a shopping cart at a store or something like that. Euro pound, Kiwi Swiss, CAD Swiss. Basically, most of these Swiss pairs, these are some beginner-friendly currencies. Safe haven, okay? Safe haven currency. Aussie Swiss, Euro Swiss, because they all are down, and they only move about 40 to 50 pips a day. Whenever you start getting a little bit better, maybe you've been driving for a couple years, few years, you've started mastering driving, right? That's when you could start looking at some of these other items above 100 pips. Pound CAD, Euro New Zealand, okay, dollar yen. That's one I mentioned earlier. Moves a whole bunch. Pound yen is the fastest moving currency of the regular currency pairs. Pound yen, pound New Zealand, and pound on. So basically these pound pairs. And then you got dollar yen right below it with Euro New Zealand, which typically has high spreads on a lot of brokers. Okay, Euro New Zealand is not the most beginner friendly currency pair in my opinion, because a lot of brokers out there have some, again, spreads on this thing can cost you twice what some of these other currency pairs run. I know I don't want to name names, but some currency pairs charge a ridiculous amount for Euro New Zealand. It's not a good idea to trade that if you're a beginning trader. I don't think. That's just my opinion. And then needless to say, gold, guys. Gold is just not beginner friendly, guys. This is not. That's my opinion. I'm entitled to my opinion. But if you're a beginning trader, and I say beginning, meaning you're under like a couple years into your trading, gold is just this. I wouldn't recommend it. I mean, obviously, everybody's free to do what they want. This is not financial advice. This is just my opinions. Okay. The typical disclaimers we all have to put out. But if somebody were to ask me that, I basically tell them every time, stay away from gold until you know how to drive your car. Okay. So anyway, that's kind of a long rabbit hole there. But anyway, just to finish this off, guys, if you're looking for this website, it's offbeatforex.com. And then you just specifically look for the Forex average daily range, which is your average true range. This is great to see what ideas of currencies you want to trade in the beginning when you're still cutting your teeth on this thing. So, all right, I digress. Let's take a look at some of these top setups. Now, I still do have 4 that are giving me a very bullish score. Okay. So let me know if there's any other assets you guys would like me to look at. I can definitely bump it to the top of the list, as always. But in the meantime, I'll just kind of go through some of these yen pairs I'm looking at. Kiwi yen, Aussie yen, CAD yen, pound yen. Okay, let's take a look. New Zealand yen right here. This is the strongest signal that the Edge Finder's given us on the bullish side. So as always, I always look first thing, where is the trend? Trend is up. Okay, I know where my trend is now. which time frame do I want to look at my curve analysis? And if I look at this daily chart, then the easiest thing to look at is the fact that we have a swing low right here. You can see we do have a demand zone down here, but I'm kind of looking here now because this is kind of where you had that little bit of a drop and then base and then rally, right? So I'm just kind of isolating, looking at that spot at the moment. And see what we got on a day. Well, and now here's the thing. That would normally be a good daily demand zone, but this wick right here, 2 candles over, it touches it. So I can't look at that on a daily time frame as far as daily demand. Oh, that is a handy website. Yeah, Mr. Peeps. Just so happens that I am trading the second highest, I think, at the moment. Yeah. How long have you traded, Mr. Peeps? I know I've seen you on here for the last, several months. Let me know how long you've been trading. I'm just curious. Yeah, I don't think you guys will see a lot of people on YouTube kind of going through that like that. Especially gold traders. Gold traders are going to say, "Oh yeah, come join." I just think it's reckless. It's just reckless. But and even if you trade some of the higher, some of these higher pairs, at least now you know that those can be squirrely. Those can be squirrely. Okay. If you want something that's a little more like a sloth, moves like a sloth, that's when you want to be looking at the bottom of this list. At least to get started, at least to, we all have to test a new broker, a new platform at some point. So if you're testing a new platform out, especially when you're doing that, when you're placing your very first trades, go to the Euro pound, go to the Kiwi Swiss, right? To at least test out your platform. You don't want to be opening up a gold position on a brand new platform that's moving 5 to 6 times faster than some of these other pairs. Could run off and leave you. But it is also kind of cool looking at this list, how you can compare from years past. And you can sort it from, slowest to fastest, et cetera, et cetera. I just wish they would change the table on this, because whenever you scroll to 2025, now it cuts off your currency pair. It's kind of a pain in the ass. But anyway, I don't always get what I want. Actually, I guess you can probably get it fairly close. Let's go look at that again. Okay, I guess that makes it to where it's not cut off. You're cutting off some decimals, but all we care about is the first 2 or 3 numbers anyway. And you can understand that's Euro, New Zealand. So yeah, that's pretty close. I'm going to send them an email and tell them to fix this. I'm not even affiliated with them, but I'm still going to do it, because whenever they come out with 2026 data, what are they going to do? You won't even be able to see. Excuse me, guys. Voice is all froggy today. They're going to have to fix that. But anyway, New Zealand Kiwi yen rather. The best daily demand zone I have is right here, which is where you guys see this yellow bar here. Got a yellow bar, but inside of it, guess what I have? I have my 4-hour demand zone. That's my confluence I like to look for. You had 4 candles coming out of that zone. So that's a strong area on a smaller time frame. We flip down to 4-hour. There is my 4-hour candle right there. Now, it's not a red candle, but it's just so happens to be the candle that based before this strong move. Quite often on demand zones, you hear people say you have to wrap your rectangle around the last red candle before the leg out. But at the end of the day, I've been studying these zones for 12 years now, guys. I don't think to me, it doesn't matter whether it's a down candle or an up candle. It's the point, it's the origin of an overall strong move up, which is typically where the unfilled orders are going to be, because we tend to see the gaps just above it. So that's just my little spin on supply and demand. Forever, I did subscribe to that, looking for the last red candle before the big spike up, or vice versa, last green candle up before the big down move if I'm looking at supply zones. But it doesn't matter. because if you go to smaller time frames, as long as you find your gaps on the smaller time frames, quite often it's going to be like that anyway. See, like right here, there you go. There's a down candle right there before a spike up. So anyway, that's and that spot that 4 hour that 4 hour demand zone did have a nice, nice little bit of volume growing out of it on the smaller time frames. So that's like the farthest point I'd be interested in trading right now. But with this being the second strongest currency pair right now, it may not make it down there. Okay, probably too far. So I need to look at something closer to home, knowing that I've got some strength in my corner. So here we go. We got a 1 hour demand here. You can see that I've drawn a box on a smaller time frame. So that just simply means if I go to 15, maybe it was a 30. Yeah, 30, guys. 30-minute demand right here. That's basically what I'm looking at now. Man, I cannot get my throat cleared out, guys. Sorry. I got up late today, guys. Not gonna lie. I start my streams at 6:30, but I actually woke up at 6:10, I think it was. So I didn't quite get my morning ritual. So I'm seeing all this stuff on the fly with you for the first time live. But anyway, I like to, I don't really want to get into that. I was looking at this zone here for a while, guys. This right here was a 5-minute demand, I believe it was. No, it was a 10-minute actually. Okay, this was one out. So annoying. So this was another one that I missed yesterday. Okay, I had this little 10-minute. Now I don't use the 10-minute time frame very often, but I'll use whatever time frame the picture looks the best on. And it just so happens that this 10-minute time frame looked pretty good. But because I don't personally trade the 10-minute time frame very often, I trade the 5-minute time frame. I trade the 15-minute time frame. I don't really drill too deep into the 10-minute. So this is another great example of where my over anality, is that a word? my too much analysisness. I'm creating words on the fly here. In other words, I overanalyze this because number one, I don't usually use a 10-minute time frame, and then also the gap coming off that 10-minute time frame was only that size. So that right there said, yeah, I want to watch what happens when price hits this zone, knowing that I probably won't take the trade. And sure enough, you guys can see I should have taken the trade because that immediately gave us about a 5-to-1 reward to risk. Watch this. Okay. Let's just say you get in your trade right here. You put your stop loss down here, a few pips, 15 pips, 15, 20, 15, 30, 45, 60. Okay, so 4-to-1. So that gave you a 4-to-1. 4-to-1. So you had a nice spike up, broke a structure. That tells you all you need to know about saying, okay, I'm staying in this trade. So even when you get this pullback, because the Kiwi did have some mixed data last night on their employment numbers, you'd still be okay with that. And then it bounced around and now it kept going up. So 4-to-1. And, a good trader would probably still be in this trade looking for a new break of structures. So, yeah, that was the second trade I missed out on alongside the Aussie Swiss. So there you go. Let me see what we got in here. You're in pound yen. Let me take a look here. Trading for about 3 years, but only for Forex for 8 to 9 months. Okay. Yeah, gotcha. Gotcha. And you're also in the pound yen trade at the moment. Broke my rules. Have FOMO. So it is bound to fail. LOL. Well, it's not bound to fall, but yeah. Look, there'll come a point, and I don't know how this is for all the other traders that have been around for a decade plus like me, but there'll come a point where when you break your rule on a specific trade and you win the trade, there will come a point where you'll get that guilty feeling, that sickening feeling. That feeling of knowing I did not deserve this win because it was basically me putting a coin in a slot machine and pulling the handle. It was gambling, right? Gambling is fun when you're in a casino. It's fun when you're at a slot machine, but it's not fun when you've been in this industry for a decade. It's not, because we don't want to grow our accounts off of luck. We want to gain it. We want to grow it off of probabilities. Okay, ratios. Okay, risk ratio, risk reward ratios, risk management, and a good strategy. But yeah, we'll all get there. I know I'm there. The last time I left trades open over the weekend, I came in the next day or the next Monday and they went in my favor. So both times that happened, and this happened off of news that hit over the weekend, geopolitical news, where I come in and the trade flies in my favor. So I didn't feel happy at all. I mean, yeah, it was nice to see my profit grew, but only thing I could think about is, well, what would have happened if it went the other way? What would have happened if it would have gapped beyond my stop loss I had in? And then I'd be up shit's creek, right? So that was the only thing I could think of. Because again, that's luck. I lucked out. I lucked out on those trades. So I don't know. I just thought I would throw that out there. But anyway, yeah, pound yen. Let's see where you're at on pound yen. So pound yen, by the way, is giving us a bullish 9 score. So let's go look at that. Well, I'm interested to see. So you broke your rules. Oh yeah. Where did you enter? Oh yeah, this thing's parabolic at the moment. Where'd you enter? Did you enter on a pullback? Did you just enter on a breakout? Yeah, let me know. Be interested to see. Oh, and while you're replying to that, let me just go take a quick look at the calendar over here. Okay, so we did end up getting the ADP number for the dollar, the US dollar over here, guys. Remember, the previous number was 37,000 employment change. They forecasted a higher number, but got a much lower number. Ew, that's bad, which means this should be good for my Aussie dollar long trade. Let's go look. Let's see if it affected it at all. This was 8 minutes ago. 7:30. Let's see here. Okay. So that release was right here. So that should, if it's worth its weight in gold at all, it should give this trade a boost up. But as you can see, we're now 8, almost 9 minutes in. And the only thing it's really done is just kind of bounced it up about 4 pips. Is that right? No more than that. About 7 pips. So, and it's still early, but you see the vol. Well, let's go look at over here, actually. Aussie dollar. Here's your volume spread analysis. So there's your 7:30 candle. So that candle was the release of that data. And it's negative. It's bearish for the buck. It's bearish for the dollar. So that should be good for this Aussie dollar long I'm in. So, but as you see, it really hasn't pushed away that much. You're starting to get a couple, high volume bars down here. But so far, it's not like the release happened and it just started spiking up like crazy or down like crazy. So anyway, that's nice to see. I'm happy to see that. I'm not happy to see it because of our pocketbooks and the stock market, because that's not a good result for that. But when it comes to, or the currency even. Right? So it's just a cutthroat world, man. I have kind of front run it. Got to a double top, so I put a short on at 214.61. Oh, I need to go find pound yen again. 214.61. You put a short on at 214.6. Oh, no wonder I'm in a 1 hour time frame. Look at that. I dropped it right at 214.61. I just guessed. So there's your short. So looking for a rollover and retracement to 213.47. Okay, 213.47. Let's take a look at your coordinates here. Missed it by 3 pips. Barcelona. All right, so there's your profit. That's your take profit, and this is your entry. So you were trying to short this. Rollover and retracement, 4-hour demand. Oh, okay. Let's take a look. Where's your 4-hour demand zone? Was it up here? Were you looking? You said, oh, wait a second. Let me lose. Front run it. Got to a double top, so put a short. Oh, you did it. Oh, you put it from the. I got you. I got you. Yeah, if you said 4-hour demand zone though. Oh, I see what you're saying. Yeah, take profit before the demand zone. Yeah. So, I guess the question I would ask is, well, number one, you're obviously, you're buying in line with the top setup. So that's a good thing. But you're buying at highs. See how high price is related to the swing low? Now, the good thing is, and of course, you didn't know it back here. Wait a second. Oh, well, yeah, I guess I got to turn that around. So, yeah, just think about it. So you're selling into a strong currency pair. Okay, and this is where the fundamentals and the sentiment come in handy. Because this right here should be your, I'm not, for everybody that has this, I highly encourage this, by the way, guys. If you don't have it yet, definitely go to a1trading.com to check this out. I'll put a link in the chat here in just a second. But this thing really is my boss. This is my boss. A1, let me put this in the link for you. If you guys have not heard of this, go check it out. Okay, people pay $2,000, $2,500 a month, whatever it is, for the Bloomberg terminal. But this is something where you can get something that I think is just as good for an absolute fraction of the price. You make a one-time payment on this thing. He runs promos quite often, so I'm afraid to even say the price. I don't even know what the price is. They do so many promos. But go to that site if you guys haven't yet and check that out, a1trading.com, and start getting familiar with this thing, because this thing has completely changed my trading around. I was $9,000 in the hole on one of my challenge accounts before I got this. When I got this and I started obeying my boss, which is, hey, fundamental analysis and sentiment analysis, when I started doing that, then everything started taking care of itself. And I brought my trading account from 9,000 in the hole all the way back above break even. Okay. Because it's not only about the technicals. We have to know what the big banks and the institutions are talking about, which all they're talking about all day long is GDP, PMI, retail sales, inflation numbers. It's a big one, right? Employment numbers, huge one, right? This is all they're talking about on CNBC and other financial media outlets. Okay. They're talking about their positioning, meaning the COT report, the commitment of traders, the smart money, the big banks and the institutions, the hedge funds. They're talking about their positioning, right? Hey, we just went long this or short that. We don't see that this industry is going to do very well. Whatever the case is, guys, they tip their hand. But you can get all that same data on a COT report in an easy to read format. And then since we already know that the average trader loses money, and there's all kinds of different formats of this stat, 80% lose money, 90% lose money. 90% of traders lose 90% of their account in 90 days, in the first 90 days. Okay. There's all kinds of stats out there, but they're all the same. They're all very similar, give or take a few percentage, but they're also true. So if the average trader loses money, do we want to follow the crowd? Do we want to be a herd follower, or do we want to be a leader? Okay. We want to observe what they're doing and do the complete opposite. So crowd sentiment, retail sentiment, it's a huge one, gigantic. And within crowd sentiment, we've got retail sentiment. We've got the put to call ratio in the options market to see where the options market is positioned. Observe the masses, do the opposite. And then we can also see the AAII investor survey. It's a survey that comes out, I think, every Wednesday. So we should be getting a new one today. This is something I haven't talked about a ton, actually. Okay, let's go over here to crowd sentiment and look at the AAII survey. Okay, this is a big one. And you guys can find this anywhere, even if you don't have the Edge Fighter, you can go find this. AAII investor survey. It basically asks a bunch of traders what their outlook is over the next 6 months about the stock market. And it's a very simple question. Do you think we're going to be bullish? Do you think we're going to, oops. Do you think we're going to be bullish? Do you think we're going to be neutral? Or do you think we're going to be bearish? And this shows you their answers in a percentage. So as you can see, the biggest bar on here, obviously the blue bar is the respondents that said bullish. Hey, we're going up over the next 6 months. And then up here is your red. That's the percentage of respondents that said we're going to be going down. And then you got some neutral traders out here, some traders out here in the middle that just don't really have a decision either way, don't have any input. So what clearly is the biggest bar? It's the bullish bar, 44%. 44% of the respondents think that the stock market's going up. Because that's the three choices. That's three choices they get, right? Bullish, neutral, or bearish. Now we're just going straight sideways. Okay, that's the white box. That's the white area. So when we look at them as far as the three, not just bullish, bearish, but when we include the neutrals in there, okay, you can clearly see that the blue box is the biggest. In other words, the most popular opinion is that the market's going up. Typically, when people think the market's going up as a trader, they're typically going to go put their money where their mouth is. So their money is going to be going bullish. So if the bulk of traders among the three are bullish, do we want to be bullish ourselves? Or do we want to observe the masses and do the opposite? So what this is saying is, they think the market's going up. Perhaps we don't want to be, perhaps us as contrarian signal traders, perhaps we don't want to be just rushing to jump in the markets. Okay, that's your AAII sentiment that comes out every week. Not to mention our retail sentiment where the regular traders are in spots, spot traders in the markets. And then, of course, you got your put to call ratio, which is fast becoming one of my favorite reports, because this is the options market's actual live bets. Hey, is the asset of choice, is it showing us that they've got high put volume, meaning high bearish bets, meaning if they're going bearish, perhaps we look to go long, or are they high call volume? They're high call volume, meaning that a bullish bet. If they're more heavily on the bullish side, perhaps we go bearish, right? Observe the masses, do the opposite. And if you get a line on this report that's in the middle, well, that just means more of a neutral territory. So, let's go to Bitcoin, because I know I was asked about Bitcoin at the outset of the show. Okay. This right here is saying for Bitcoin, and this is a very strong signal, by the way, the average options trader in the options market has high put volume, meaning they're making bearish bets. So if they're making bearish bets, perhaps we want to observe the masses and do the opposite and consider looking at long positions, because we are above the high put volume, meaning we're not in neutral. We've now exceeded into the high put volume territory. It's as simple as that, really. So the easy way I like to look at this, the easiest way that I look at this chart is obviously follow the white bar. If the bar is going up and it's above the put line, that tells me I need to be buying. If the bar is going down, trending down, and goes into the high call volume territory, then I want to be selling. So I basically pretend that this is a price chart all on its own and just look at it and follow that trend, whatever that trend may be. Okay. Swing high up here, swing low down here, and look at the higher highs and higher lows. But I do not care to use this unless we hit the high put or the high call volume line or beyond, depending on if I'm whatever my bullish or bearish bias is. But again, just like the COT report, just like the AAII sentiment, just like the retail or COT and sentiment, okay, and the put to call ratio, this is not the end all be all. One does not want to be using this and saying, oh, we've got high put volume in the options market, I better go place a buy trade in the Bitcoin. No, this is just an extra odds enhancer, okay? This is just like filtering out with moving average crossovers, VWAP, supply and demand zones, okay? Volume spikes. This is just one piece of the puzzle. The full piece of the puzzle is over here on the Edge Finder itself, where we can look at everything as an aggregate to get a overall well-informed decision from the trifecta trio of fundamental, sentiment, and technical analysis, with technical analysis being the least important of the three. Okay, the sexiest part of it, all the fun colors on our charts. Okay, the part that this is what you see spammed all over YouTube, right? This is all you see. The reason my trading channel probably isn't growing is because I focus on what really matters. I try to focus on what really matters in trading, and that is the fundamental. That's the fundamentals. That's the releases. Hey, are we exceeding expectations, meeting expectations, or missing expectations? Hey, where's the banks? Where are the banks at? Where's the average Joe and Jill trader at home on their laptop or their smartphone? Where are they positioned so I can do the opposite? This is the boring stuff. Okay, this isn't sexy at all. All right, sexy if you're a nerd like me and you get deep into the data. And obviously, Nick is Trader Nick. He's just, we're like the same in that aspect. We like digging into the data. But the Edge Finder, the whole reason I even love digging in the data to begin with is because this thing kind of pulls it all together and makes it easy on the eyes. Makes it a lot quicker. This thing single-handedly started saving me, guys, at least 2 hours every single day. Because prior to using Edge Finder, I'd be going into Forex Factory and looking up specifically the PMI data, looking at graphs from the past, retail sales, okay, the interest rate statements, the employment numbers, looking at past readings, and then comparing them to today. This does all that. Okay. This does every bit of that. I've got every bit of that over here, economic data. Okay, there you go. There's your growth data, your retail sales, shows all the different, comparisons from the previous periods. There's your inflation numbers, your CPI, your PPI, same thing. This is going to show us kind of a recent history, which we can obviously scale back as, quite a few years if we want, even depending on the report, right? And get an idea of, are we trending up, are we trending down, or going sideways on all these pieces of information. Labor market data. Okay, there's your NFP, your ADP, all your acronyms, your unemployment. Okay, there's your interest rates, your housing data. I mean, this thing's got everything. This is your Forex factory. This is your economic calendar in itself. And then not to mention the economic calendar itself, if you want to look at everything at a glance. Hey, there you go. This is the same thing as Forex factory right here. So this is an all-in-one situation. This single-handedly changed my trading around, guys. So I'm no better. I'm no different than any other trader that's been around as long as me. The only thing is I've got, if I'm good at one thing, I'm stubborn as hell and I'm consistent. I consistently am trying to get 1% better every single day, even on the weekends, guys. It actually drives me crazy sometimes. I don't know how to just relax. It's hard for me to sit down and watch a TV show or a movie because I'm constantly like, well, what reports do we have coming up tomorrow? What reports is next week? How's that Aussie inflation data? How's that going to affect my Aussie dollar long trade I'm in right now? Okay, I'm pretty much ate up at it. I'm ruined, but I love it. I love it so much. So, that's the only thing I'm good at. I mean, that's not the only thing. That's probably what I'm the best at. I'm just stubborn as hell and I'm consistent. I will make this work. And I will get to the point to where, I can do the fun stuff I want to do one day, the charity type stuff I want to do, guys. I want to go help people. That's important to me. That's something I've really, as I've gotten a little older. Okay. Somebody asked me earlier how old I am. Well, I'm in my 40s. 40. I forgot. I got to think. 43. Okay. 43. Yeah, I know. I look like I'm in my early 30s. I think. I appreciate it. But no, I'm 43. I'll be 44 in August. And but I don't feel it. As I feel like I'm still in my early 20s. Because for me, I'm out chasing something. Okay, I'm chasing a goal, I'm chasing a dream. I've always, again, if I'm good at anything, it's I'm good at being stubborn and persistent as hell to chase what I want. As a kid, what did our parents tell us all? What did our teachers tell us? Okay. What did somebody in a high up space tell us? You can go be whatever you want. You could be whatever you want. Grow up, you can do whatever you want to do. It's what we were all told. Along the way, what happens as we age, as we get older, as we grow mature? We start telling ourselves, because of the bad situations we've had in life, the negative things, we start telling ourselves, well, maybe we can't. Maybe daddy was wrong. Maybe mama was wrong. Maybe that teacher was wrong because I haven't done anything good, or I haven't gotten anywhere close to what I was wanting to do. Hey, we tell ourselves that. Hey, never mind, I can't do it. This life is a lot harder than they made it out to be. I'm relegated to the norm, to being average, right? We tell ourselves that. Sometimes you may be around bad or toxic people that say the same thing. Oh, you'll never amount to anything, right? But that's not a fact. Is that a fact? No, it's not a fact. It's just an opinion. It's not reality. So if I'm good at one thing, guys, it's the fact that, I'm in my 40s now, and I was told when I was a kid that I could be anything I want to be. I can do anything I want to do. So if I'm good at anything, I just actually still believe that. And I channel my energy into a passion. I follow a passion. This is passion. This is my passion. And my passion for a long time was bowling. You can see my bowling pin in the background up there. I used to bowl a lot of tournaments, a lot of leagues, used to win a lot of tournaments, win a lot of money. It was a lot of fun. Good stuff. But yeah, my passion just got deeper and deeper with trading. Right? So this is what I focus on. I focus on this because I want to do some good things. There's a lot of people that could use some help in various avenues, and I haven't got it all figured out yet, but this is my purpose. This is my reason for, making the most out of trading. So if I can teach somebody to do the same thing so that you guys can help make your own decisions like that, come up with your own way of doing good in the world, well, that's a big satisfaction for me. But it all starts with just getting 1% better. 1% better every day. That's it. Couple hours too early in your trade. Yeah, sorry, I got off on a tangent there, but just to finish up, because it is almost the end of my stream. Yeah, look, I liked your idea. You did sell in a premium. Okay, if we're looking at this swing high and this swing low, kind of on that 4-hour time frame, I like your thinking about the fact we were at a premium. But as far as the zone itself, let me go double check. Okay. So if I'm just looking at this on a 2-hour time frame, and I'll hang on here for an extra minute or two with you. Okay, that would be about the closest thing to a supply zone I could come up with. Okay, last green candle up before this big move down. You said you got in at 213.47, but I'm not really seeing. Let me get rid of that. Yeah, yeah, I mean, look, I don't think it was the bad trade that you did, because it looked to me like you're kind of front running. Like you said, you got in here on a 4-hour time frame. This would basically be your 4-hour supply zone here. Let's do this. Actually, I would have to move this to there. So there's your 4-hour supply zone. You got in here. And then, yeah, it's just chewed right through. So here's what I would recommend to you, Mr. Peeps, the next time you come across a situation like this where you're trying to get in. This will save you a lot of time and a lot of stress. Okay. Let's just say this zone has not been hit yet. Let's just pull it forward. Okay. And let's do this. So what I would recommend the next time, and I'm going to just move your trade out of the way. The next time price comes into a zone, now your goal is for price to drop after it hits the zone. So just like I say all the time, you have to have on a smaller time frame, clearly an uptrend, right? You have to have that temporary uptrend, that counter trend movement. But when price bounces into your zone or whatever, support resistance, doesn't matter. Rather than getting in the trade right away, watch for this price action. Watch for a bounce out of your zone or your support resistance line, and don't do anything yet, because here's what I like to, this is what helps me. I'll just tell you what helps me if I'm kind of like in the middle. Okay. When price starts breaking out of that zone that you wanted to short in your example here, look for this break of structure right here. See that swing low? And I actually drew that perfect. See how that swing low was also a former swing high at one point? Don't focus too hard on that, but just mainly look for the fact of, hey, where was my most recent swing low? Okay, it was here. If I get a price action that breaks that structure, the BOS, the change of character, okay, I call it BOS. To me, that's all the BOS. If we get price break this structure right here, we've formed a brand new downwards impulse leg. This swing high to this swing low. Why? Because this swing low is now lower than the most recent swing low. We have a lower low. This is our first flirting of the fact that we're changing course and going back to the south. But we don't short here. We wait for a retracement back up to a newly formed supply zone that forms on this new impulse leg down. New impulse leg down. So let's just say we have a new supply zone that forms like right in this area right here. We would wait, and that's where you would enter the trade right there. And a lot of times you'll see that new zone actually forms right at the beginning of the zone that you initially were looking to short or buy from, right? So here's just to kind of wrap this up for you in a bow. This is what you want to see. Okay, we want to see this break of structure right here. Okay, just a break and a close below. Now this is going to be the hardest part for you right here, is waiting and thinking, oh damn, it's hit my zone. I need to short it, right? This is a logical place to short. But all I'm trying to do is help you to see a good way to filter out some losses, right? Because if you short right here, well, what could happen? We have two options. Well, if you short right there, price could very easily do like it's doing right now, just chew right through your zone and stop you out for a small loss, right? That's obviously the worst case scenario. Yes, break a structure. Yes. So there's two things that's going to happen. It's going to either do what it's doing for you right now, but perhaps give you a small loss, hopefully a small loss, a controlled loss, right? Or it could just completely drop in your favor, right? That's your two options. You're either going to lose money or make money. If you short it right here, if you short it up here, well, here you've made money, but it also opens you up to losing money. But by waiting on a break of structure, this break, and it's not always going to look exactly like this. This is just a general framework. But as long as you break that structure, then you wait for a retracement back to give you a better price. And what typically happens, well, there's really a couple ways you could do this. Number one, you could look for this brand new supply zone that forms. Okay, so you got your main supply zone. We've bounced into the supply zone. We wait for this break of structure. And that creates a brand new impulse leg. It's an impulse leg because it broke a structure. It's diverging. This is a divergence. Okay. But you don't trade the breakout. You always wait for the retracement. A lot of times, more often than not, you'll get a new supply zone that's formed on a smaller time frame in this area, even if it's the same time frame. But I just go to a smaller time frame just so I can just look for something to get in quick. Now you've got that. That I think is the most powerful option. But another option, if you like fibs, another option is to take that impulse leg and just flip your fibs from the top to the bottom like this. Just look for a 61.8 retracement. Okay. Something on the other side of 50%. Right. Make sure this pullback is somewhere, above the 50% line. I personally love supply and demand because that's where I've had my success. And supply and demand does work on smaller time frames, but you just have to understand there's noise down here. And this is the whole point of doing this confirmation entry. This is called a confirmation entry. Ooh, right. So I normally wait for the break of structure, but then I was not looking at the lower time frame. Supply to enter. Yeah. Just try that. So, you're looking at this on a 4-hour time frame, you might drop down to a 1. Just go by the rule of 4s. Okay, if you're looking at a 4-hour zone, divide 4 by 4, it equals 1. Go look at a 1 hour. If you're on a 1-hour time frame, divide 1 hour by 4, and you get 15 minutes, right? 15, 30, 45, 60. So just keep the rule of 4 in mind. But again, it doesn't have to be perfect. Maybe you go down from an hour to a 30-minute. Maybe you go from a 4-hour to a 30-minute. Maybe you go from a 2-hour time frame to a 30-minute or a 2-hour to a 15-minute. The idea is just get away from the main zone, time frame you're looking at and go look at something a little more fine, something to fine tune it with. So hopefully that helps you out, my guy. Yeah, that should help you out a ton right there. Break a structure, retracement to a zone, and this is your trigger to enter the trade right here. Okay, that right there is your trigger because you've hit this new zone. And at that point, it's out of your hands. It has proven that it's at least trying to reverse the trend. When you limit order, there's no proof because you still have higher highs and higher lows. When you get that first lower low, and this is the exact same in reverse if you're buying in the demand zone. Hope that helps. I am going to get up out of here. No, you're fine, man. Hey, you can keep me around as long as you want. I got no problem with it. I'll get my new link up for tomorrow's live stream here shortly. As soon as I end this stream, I'll go create that link. As always, guys, I do appreciate your time. Go see Trader Nick. Okay, go on over there. Check his show out if you would. He is playing as we speak. Just go to your YouTube. Well, actually, just at Trader Nick. So here you go, guys. Trader Nick. Simply click and make sure you go to his page and like, share, and subscribe. I'll be doing some more work with him now, guys. Just so you know. I'll be on Friday. I'll be on his show Friday, but we chatted last night. And looks like I'll be appearing more and doing some cool stuff with him. So he's got 525,000 subscribers. This guy's got a huge page. We're going to do a lot of cool stuff, I think, in the future. So go give him a shout. Tell him Tiger sent you. And I'll be back tomorrow, guys. We'll talk to you tomorrow. So have a wonderful day. Be safe, okay?